the Chief Executive Officer of UOB Islamic Asset Management Sdn Bhd. He has 20 years of investment-related experience in the financial services industry. Beginning in the Treasury Division of a Malaysian bank, he dealt in a multiple financial instrument for both proprietary trading and corporate desk before moving into asset management in 2002. He was based in the Middle East in 2008 and 2009 to develop the Middle Eastern market for a Malaysian asset management outfit and specialized in Islamic asset management since 2010. He graduated with a Bachelor of Commerce degree from La Trobe University, Melbourne, and obtained the Security Commission of Malaysia's Capital Markets and Services Representative License CMSRL for fund management in 2011. He is also an MFPC Shariah RFP. Please welcome.
Assalamualaikum. Good morning all. Just let me share my screen for a second. Okay, so thank you MC for the introduction to me, and good morning, Assalamualaikum to the speakers, attendees of the event. Thank you for the privilege of having me here today to share our experience in the digital aspects of financial planning. My name is Reza. I am from UOB Islamic Asset Management based here in Malaysia. We have been around in Malaysia since 1997 through the UOB Asset Management, and we set up the Islamic specifically only in 2017. So, of course, we have all been around for many years, and I think the MC introduced that on my profile that I am also an MFPC RFP holder. So I remember doing the exam in 2019 before the pandemic, where it was all on pen and paper. We were all sitting in a classroom learning. Nowhere did we expect for it to have a digital financial planning. We did not expect to hear the term digital financial planning at all at that point in time. It was good life, face-to-face, laughing, happy, you know. So it was a very interesting experience for us to go through. And now I have the pleasure of sharing with you this pandemic lesson number 3 of digital financial planning, a jolt to embrace technology in the future of work in client management. So, interestingly, I think this is a once in a lifetime event that we have, where this pandemic COVID-19 really, if you may, turn our life topsy-turvy. Lockdowns, empty streets. We couldn't meet people. Even you were to see your own family members, you were concerned about infecting your family members. So it was just crazy. So, but life needed to go on. So we have always been using online banking, for example. Basically every bank will have their online banking platforms, which we have been using. But this pandemic proved that digital needed to evolve for the better. Since we could not go out, how could we be productive within our own space? Even food, we had to use our fingers to order and have it delivered to our home. Right? So COVID-19 provided that big needed catalyst for a change for us to move forward to a new business model, to a new life, if you may, a new norm in doing everything that we did. So to me, it was a blessing in disguise. Something that we have always had, technology is something that we always had all this while, but now with this pandemic, it took us up to the next level. Imagine this, in the past, you would not expect to see me on your screen. We would be in a nice hotel room, talking face to face, and chatting, but now, you can be in any corner of this world and listening to me, talking to you about this. So that, to me, is a beauty of COVID-19 that we have taken advantage of despite this pandemic. So that brings me to the next slide, which is basically what it had also done was this opportunity was taken across the globe. did not just happen in Malaysia, it was all over. I won't go into all the details of all these examples, but one of the big names that you would have recalled, was in the news, was Robin Hood. So before this, Robin Hood, all I know is that, criminal who robs from the rich and give to the poor, but instead it turned out to be a platform which was even viral. People went crazy, and so it was very interesting times for all of us. And I'm sure there'll be more of this to come in the near future, and even down the road, where we can all take advantage of these opportunities. So closer to home, what I wanted to share is that a similar trend was also seen. I am from the asset management industry. So of course, a lot of my examples here would be more skewed towards investments or robo-advisors is the term that they've been using. So I have shared here some information about the numbers and the statistics in Asia about how digital had actually grown in this space. So for example, you see the table on the left, sorry, not table, the bar chart on the left, the inquiries on robo-advisors grew in Singapore, in Thailand especially, by 181% in 2019 and 2020. This was a survey done by PwC. Even in Malaysia, there was an increase of about 18%. In Vietnam, surprisingly, 40%. So only Indonesia, there was a slight decrease in the inquiry, because I think Indonesia had a lot of platforms and they have even more today nowadays. So we can see that there is a growing increase of interest in these robo-advisors. Closer to home, in Malaysia, there was this survey that was done, and it showed that 175,000 new digital investment managed accounts were opened in 2020. So imagine that 175,000 accounts only in 2020, which is more than 8 times of what was opened in 2019. So that showed you how much the trend or the movement towards digital investment grew throughout this pandemic. Because why? You and I, we couldn't meet. The only way was for us to go out and meet digitally, like what we are doing here today, right? So significant appetite among Malaysians, because of the opportunity of digital, is for them to do it themselves. Even EPF, for example, gives you the opportunity to invest by yourself. So you can choose whether you want an advisor, a unit trust agent, a financial institution to advise you, or if you want to do yourself, you can also do it via the digital platforms. All right. So this was a change that we saw during the pandemic period, which we believe going forward, it will be something even more that will happen. So growth rate in terms of number of accounts, number of robo-advisors, we've seen more and more companies coming to offer robo-advisor solutions to investors to show that there is an increasing demand and supply as well. Of course, when there's demand, people will come in to offer up the supply. Right? So the statistic also showed the average transaction value was about almost 1,000 ringgit per person. So the quick question is that then, can we not go digital? If everybody is going digital, can we don't want to? I don't want to. Why should I jump on this bandwagon? If you look around you, nowadays, even when you go out and eat with your family members, most likely you will all be picking up a telephone and everybody will be facing it. So whether you like it or not, we are all heading into the digital space. Interestingly, now, when you actually sign up for some, I don't know, some software, some system, or going to some website, the computer will now ask you, are you a robot? You have to declare that I am not a robot. I'm like, wow, it's up to the extent that now we have to declare that I'm not a robot. So how can we not go digital? It is something which is unavoidable. All right. So if you look at the population of Malaysia by age group, the median is 29 years old, 29.3 years old in 2020. These are the prime years of a person. And the people in this age bucket are basically those that are very digital savvy. They will most likely have one phone, if not 2 or 3 phones that they will have. So what is the best way of tapping into them? It is via digital, because they have their screen on 24/7, if you may. How they want to tap in. If you do not, you'll be missing out on this big ship, big plane, big jet that is flying going forward. So it is something that's not avoidable. I believe all of us would have to go digital. It is not a question anymore if can we avoid it. I think it is inevitable, as what Thanos would say. So the biggest advantage of this also is when we go digital is that productivity and efficiency can also increase. So that is one of the things that people have taken on to take advantage of this digital evolution. So adding on to it, the benefits of this is when we go digital, when we have digital financial planning or digital whatever it might be, the first and foremost is the mobility of this. It is something that we can transact anywhere in the world. You know, my UOB asset management, we have our own digital platform, of course. And my colleagues in Singapore were saying that they have clients who are transacting with them, who are sitting by the beach, halfway across the world. And it can still be done today at your fingertips, given the benefits of digital technology. Those days, you will need a table, you will need a pen, you will need a piece of paper, sign, and you need to fax it or scan it and email it or something or the other. But nowadays, it can be as easy as 1, 2, 3. Right? And the reach is a lot easier. With just, you have your WhatsApp groups, for example, or you can do your TikTok videos, you can reach a lot more people, you can be known a lot easier, so it's a lot better to do it that way. They can be in the other side of the world, you can still reach out to them to do business, so that is one of the biggest benefits of it. The thing that people also look at is digital to make your life simpler. Simplicity. So if you have a platform or a user interface, they call it, that is very technical, very complicated, you have to search all over the screen, where is it? It makes it complicated for people. People know, they want it simple. I got enough challenges in my life, we need to provide something simple. So digital can provide you that simplicity. The next bit is automation of digital, enhancing, leveraging on digital. So automation is, for example, routine tasks that you have been doing on a day-to-day basis. So why can't these tasks be automated? Instead of copying, pasting, emailing, every day you're doing the same thing, that process can be automated, and hence the person who was doing that job at one point of time can now be used to do something else. So that is another major benefit and cost-cutting factor, if I may add. So effectively what it does, it increases the efficiency. You can redeploy your assets to other more revenue providing activities, or reduce the number of accounts if you made that there is a risk of that also happening, or increase your investment into technology to make it even better. So these are the things that you can do if you were to adopt the digital financial planning. But looking at it, we are here about digital financial planning. What is it really that investors want? So there was this survey done by FIMM in 2019, which I extracted a part of it, where they say that investors still prefer to invest based on advice. I mean, we're all talking about investments. There are so many things happening on a daily basis. War in Ukraine, or COVID, or whatever economic things that are happening, political. So there's so much. So of course, investors still prefer to invest based on advice, where this advice are coming from people who are deemed to be experts in the field, who keep track of the markets, who know the trends. But sometimes, of course, they have family members who tend to know more than what they know and advise you as well. But it's okay. It happens. Stock tips is also advice that we take from our friends to, buy some shares. So that is what they had come up with the survey in 2019. And then we had engaged PwC in 2021, and they found, in a way, a shift of some of the requirements of investors. They said that now, especially, this is 2021, so last year. So you know that it was during the pandemic period. People wanted digital first because they were scared of walking into a shop. They were scared of sitting in the coffee shop with you in case they might be affected with COVID. So they wanted to have the ease. They wanted digital first, so that anything, I can just talk to you on the phone or transact with you over the phone. So that was a new thing that they wanted to, which was not available in the past. And the other thing that they said was there was a shift to new customer segments. So now, for example, you are seeing more asset managers moving into affluent and mass affluent. With the advent of technology, you can reach out to a wider clientele. I will share a little bit more about how you want to reach out to this type of people. So there is a shift, or you can add on to new customer segments to your current clientele list. The third piece that they said was personalization and empowerment. Okay, what does this mean? This is a little bit more serious. Personalization is because they want something that is custom to them, right? Something more personal. So, for example, I want to do something only equities, Malaysia. They want to be very specific. They might have certain quotes that they want into it. Like real estate planning, for example, they can be very personal. It can be very detailed because you have to. For you to do a financial planning for real estate, for estate planning, of course, it has to be very personal, has to be very detailed. Every single asset, every single next of kin, all has to be lined out, identified, documented, so that you know when it is required, you are able to bring it out and give it accordingly. Empowerment is the next bit. They want to be in control, right? So, you know, with the advent of technology, everything's at your fingertips. They want more control and knowledge. People are, of course, a lot more knowledgeable nowadays. On your phone, you're getting news every day. People know a lot more compared to those days. Those days, you will need to use sit at a coffee shop and overhear people, for example, what we're talking about, what are the latest gossips, you know, what are the latest rumors. Now, at your fingertips, even if you do not want to hear any gossips, hey, you will get it, I'm sure. All right? So people are more knowledgeable. They believe that they know more. They want to then make the decision on their own. So this is basically the next part of it, the changing role of advice. We are all here. I believe most of you would be RFP holders or financial planning. Our job is basically to advise our investors. So in the past, if you look on the leftmost of your screen, it was predominantly fully delegated, right? Your client, you have an advisor, which is us. Basically, we would then, based on market information, based on the products that we would have, we would then advise the client, okay, Mr. A, this is the best product to take on, this is the best instrument, this is the best thing. The client would then just, okay, I don't know anything much, you know, I'll take advice from you bulat-bulat, you know, and take it on. But this has changed over time. All right? Now people are more informed, as what I mentioned earlier. So now people want to have more control over the things that they invest in. So it's now sort of like an assisted advice. Right? So the middle box there, you can see that now the client wants to have a role in the decision. So not just the advisor, still doing the same job, still based on the market data, still based on the product that he have, recommends to the client. But now your client is smarter, right? He has the information, he has the news, he has the data. So he can then make his own assessment and perhaps discuss it with you, the advisor. I think we shouldn't go too much into equities. Perhaps, you know, given the market volatility, we might want to reduce our exposure into equities. An example, right? So that's where now the client is more involved in the decision making. So we have seen this evolve towards that. We have seen your clients now are able to give you even more feedback, more comments toward their financial plan, right? So proliferation of assistance is what we have been, it has been moving into. And now we are seeing even more of self-directed type of advice, whereby with the advent of technology, the digital tools that are available to him, the client is able to make the decision on his own, given the information that he has, the products that are easily available at his fingertips. He can easily get the information and then make a decision based on those information or knowledge that he has. So now, from the leftmost, where it was basically you just advise, the client just takes it as it is, as he doesn't know much, to sort of like a joint where the client knows more information, and now that you see more and more clients taking on the decision of their own. Recently, there was a launch of a platform for estate planning where it was digitally done. So even that is also now available, where you can basically just go on the internet and, you know, click, enter the information and done. You know, you can do your will, your estate planning right there on the website. All right. So coming back to the investment part of it, how does a robo-advisor work? So on the investment side, we always hear this robo. Robo is basically, it's not a robot. There's no actual robot like the guy in the picture there. We don't have any robots here in the office as far as I know. I am totally a human being, I assure you. But what it is actually an algorithm. Right? It is actually mathematical models built in with computer programs to make it more streamlined, to make it more efficient, and then it works almost automatically to advise on your investment. All right. So how does it work? What are these models? First and foremost, it assesses your risk appetite. It ascertains your investment horizon. That, based on this information, it will design the appropriate investment portfolio for you. Because bear in mind that once you have shared your risk appetite, your investment horizon, you basically already shared your goal. This is for my education planning, for my children's education planning. This is for my retirement. So of course, you will know what is your risk appetite, given your time frame that you have there, given your investment horizon, given the risk appetite, given what you want it for. So then this robo will advise, design the appropriate investment portfolio for you. All right. So once you decide, once you transfer the money, the robo will then execute the trades to the design portfolio which you agreed upon, and occasionally it will rebalance the portfolio. So how to make it work well is that these robots have to ensure that the interface, the platform, is simple to use, because if it is complicated, people will just skip. People will just try a few steps and like, oh, this is too complicated for me. They will walk off. Right? You will lose a customer just like that. Right? It has to be smart, because remember, people are smarter now with whatever information that they have already. So hence, your robo, you yourself have to be smarter than otherwise, what value do we bring to the table? All right. And finally, because this is digital, you have to make sure that it is a safe and secure platform that you are providing. So if you're able to provide all these three, this is at least the basic necessity that has to be inside the robo advisor, complete with all the formulas, all the mathematical model, the AI that I was mentioning earlier, built in for you to build, and that it provides you with a robo advisor. All right. So for example, for UOB asset management, we have this platform which we call the UOB AM Invest. Right. So our process, first and foremost, is to define the capital market assumptions. So what is this capital market assumptions? It is basically our view of the market, how we see the market, how we see which asset class will do better, which will do lesser, how much should be going into that asset class, depending on the current market scenario and based on our outlook going forward. All right, so that is the capital market assumption. First, we start with that first. Once we have this, then we say, okay, Mr. Client, let me understand you better. Risk profiling, goal setting, like what was mentioned earlier, and based on that, we'll take his what he wants, put with this capital market assumption, and then personalize the investment portfolio for the particular investor. And it's not enough to just do that portfolio. Of course, you have to make sure that you track it, you monitor it, and then you rebalance it depending on market situation. Because remember, markets move on a daily basis, hourly, minute by the second. So it's important for us to monitor it. So sometimes you would have done it by yourself manually, but now with the advent of robos, these robos actually do themselves. So in a nutshell, this is how UOB AM Invest model works. For the capital market assumptions, I was explaining to you how it works, what it is. It is based not only on long-term, but also asset class valuation vis-a-vis its own history. So for us to build this, it's not something that we just, oh, I think equity will do well this year, let me invest 50% of my assets. No. It is based on historical data. We will do back testing and, project or predict. So it's more of forward-looking. We're using historical data, but more for forward-looking purposes. So we develop this capital market assumption and then build it into our robos. Now, this is an Islamic Wealth Management Conference. So I want to bring your attention to this part. Can we use the same capital market assumption for conventional platforms or Islamic? Can I just use it? Cut and paste is the favorite word. Right? The short answer is no. I have some data here. This is information from the Standard & Poor's Global BMI Index. So you can see here that you have the conventional index, which is the top pie chart on top, and the Sharia index at the bottom. So this is based on the same global BMI index, but the difference is one is conventional and one is Sharia. So it's a bit cluttered there. So you can see the table on the right, on top table there. You can see that the difference between the conventional and Sharia, there is quite a significant difference in the sector allocation between the conventional and Sharia. And then when you look at the returns over time, you can see that in this case, the index started from 2012. It moved, although quite similar, but there are times where it can diverge. it moves slightly different. It can be better or worse for either or, but in this case, it is showing that the Sharia did better than the conventional over a 10-year period. Right? So on that basis, can we use the same capital market assumptions? I will give you the answer. The answer is no. We need to develop a specific capital market assumption for Islamic, because Islamic assets would have a different characteristic versus its conventional parts. Our speaker before this, Dr. Abdullah, have shared a lot about Islamic, about the benefits of everything. So part and parcel, that would have contributed towards this difference and of why it has this type of discrepancy. Right? So taking a step back on financial planning itself, right? We are looking at traditional versus digital. So this is something that we would have learned when we were taking our RFP. One is to establish and define the client-planner relationship. So what do you do? What do I do? Right? So I am the financial planner. You are the customer with the money and whatever that you want to plan go forward. Right? Number two is to gather the data to identify his goals and his expectations. And then you, as the financial planner, to analyze his financial status. Does he have the money, or does he have the debts, or whatever it is, what we learned in the few modules, and then we develop the financial plan. Once we have developed the financial plan, we share it with the client, we implement the plan, be it investment, be it real estate, be it estate planning, be it gold, be it whatever asset classes, be it whatever insurance. We implement it, and then we monitor the plan, similar like the robots, you monitor it, and then you tweak it if you need be. Right? So that is the traditional way. Now, when you look at the digital financial planning process, it looks pretty much the same. Right? Because financial planning is financial planning, be it the traditional face-to-face or digital. The main difference being the platform. Right? So digital financial planning is the same thing as well. You need to define, I am the system provider. I am providing you the advice. You are the customer. You come and subscribe to use my services. Fantastic. Okay, Mr. Customer, come and share me your data. So he key in. So instead of me telling verbal, now he needs to key in digitally, right? So the difference is instead of him verbalizing, now it's all the client needs to key in digitally into that. But otherwise, the process is the same, right? So when you look at the fintech space or the digital space, there is a lot of companies out there providing all sorts of solutions, be it investments. You have here, for example, payments, remittance, AI or data, marketplace, prop tech, Islamic fintech, e-wallet, lending, insurtech, crowdfunding, blockchain, wealth tech, KYC, RegTech. So there's a plethora of, in the list here, there's 233 fintech companies looking at that space. Right? Even UOB are one of them. Right? So we provide, for example, a robo, a digital advisor. If you want to let go to me for me to advise everything to do it as per what the robo plans, fine, we can do it. Or if you want to have more control, in the fund direct at the bottom, we can do that as well. No problem. Right? But despite all of the solutions that are available there today, when you talk about digital financial planning, are we there yet? Do we actually have a platform, or at least a single platform, whereby the customer just comes and he can do it as easily as how he sits in front of you and get it all done? Right? That means the 6 steps that I mentioned earlier between the between the traditional and the digital. So the same 6 steps, and knowing all the instruments that you have, the retirement plan, the estate planning, the education planning, the insurance, the medical, the investments. Do we have all these two together? Do we have that? UOB, for example, is only specific on investments. So I can provide only on one particular segment. Right? So this is a question for you to look at and to consider. But when we talk about digital, the thing about digital is also that we have it can be very broad. Right? And people nowadays, their attention span is very short. And you need to capture their attention very fast. So it's very important for us to ensure that the client engagement is strong, it's there, it's consistent. Right? So we need to create content. So this is like, now you want to be a YouTuber or a TikToker. Is that the term? But basically, the digital content now will be different. So you have this funnel. Right? The funnel is basically where the first part, the top of the funnel, the tofu stands for top of the funnel, where basically you are just casting your net out wide. Right? It can be anybody. So it's not your existing customer, it's anybody down the street, but you're just casting your net out wide so that people would then be aware of your existence. Right? Because first and foremost, before they can reach to you from a digital standpoint, they need to be aware that you do exist. So that's the top of funnel. And then as you zoom in, then let's say, for example, I'm surfing Facebook, and suddenly I come up to an advertisement of UOB. Say, oh, UOB has a website or has a robo, and then that comes up to the middle of the funnel, where I would then start to search for UOB, for example, and then I look at it. Okay, what does UOB have to offer? So it's now moving to the next stage where the awareness has been done. First part now is for me to make sure that I clinch on the interest. So this is just putting it together in a structured manner so that then you can understand the digital engagement of the clients, right? And then the third part is once he has shown some interest, it is for you to then to make sure that you act on it, right? Sometimes, for example, he goes into the website, he might not be interested. Then follow up. It's the same thing as how us as humans, when we engage, you got a contact for a referral, for example, you call the fella, hello, are you interested? Say, oh, I'm busy at the moment. Make sure you call him when he's not busy. Same thing as digital. It has a similar type of method, but different content, right? So we're talking about content. That brings up when you talk about traditional versus digital. The traditional way is basically where you have all these newsletters. You know how you will be emailing them or sending out flyers, or every monthly, quarterly, you'll be sending all these write-ups. But nowadays, especially when you look at the population or the interest of the youngsters, okay, I'm not that young, but even for me, it will be challenging for me to read. But if it was a short video, for example, it will be a lot more interesting. So that's what UOB, for example, also did. We identified that this was our digital space that we wanted to go in, and then why we did 1 minute sort of video to update our investors of what. So this is just moving forward and moving in the digital trend to do sort of like our own TikTok, if you may. Right, excuse me. So customer engagement, traditional versus digital. To make sure that we stay relevant, that we stay up to date, to make sure that we capture those clients. So basically, in a nutshell, what did I share here today? Basically, if you don't adapt fast, you will get left behind. So for example, during the lockdown, if we did not create that digital platform, we would not have the avenue to get investors to invest in, we will get left behind. Similarly, you as financial planners, if you don't adapt, get the system, get the platform, we will get left behind. We won't be able to do our businesses. Number two is to improve and make sure the change is for the better. Sometimes we do improve, we change, but sometimes it's not for the better, we change not for the worse. So make sure it's something for the better. And number three is one size does not fit all. Remember, it's not the example I was saying about the CMA, conventional and Islamic, where it is different. So I cannot just simply take the conventional and implement it on the Islamic space. It does not fit. It does not work well together. And number four, despite all those companies that are already there, despite all the competition in the digital space, there are still opportunities to be had. There are still a need for human interaction. In fact, one of our policies is also to blend between technology and human. Hence, I found this picture of a robot hand and a human hand together. To me, I felt it was a very good closure to what I wanted to share here today. I believe this is my last slide. I thank you very much for your attention. I hope there was some insightful information for you. Thank you very much.